So the US dollar has gotten too strong and China has had enough. They are pissed off to the point they are now coordinating a US dollar dump. Now, countries are starting to revolt against the strengthening of the dollar, and this time, China is going all out. Now, we have talked endlessly about how the strong dollar is taking down the global currencies and economies like a wrecking ball. And if we look at the DXY, it has been on an incredible rise since the start of the year, and that means for nearly 9 months other currencies were getting devalued to the ground. Now, if you're in the United States, a stronger dollar is generally good news. It helps to dampen the effects of inflation, especially when it comes to importing natural resources and commodities. Things like food and fuel will be slightly cheaper because they are priced in dollars, but it is a zero-sum game. What America's enjoying with the reserve currency is at the expense of other countries, and they are seeing their purchasing power getting eaten alive, not just by inflation, but also trampled on by the stronger US dollar. And right now, China is no longer willing to get punched in the face without a fight. They are striking back in this currency war to defend against the yuan getting devalued to hell. And we can see the yuan has virtually collapsed this year, falling well below 10% against the dollar. And this has led to many traders around the world betting against the Chinese yuan, crushing it even further. So in a report, the People's Bank of China actually told their state-owned banks to get ready to sell dollars and buy the Chinese yuan. The central bank's previous effort they have failed, and now they are preparing for a massive dollar dump. And this is big news, guys, because it's a coordinated action that could trigger a deadly domino effect. And we know the state-owned banks will obey the Central Bank of China, which is effectively the Chinese government. And this move is going to sow the seeds of de-dollarization in the minds, right, of other countries. China could actually trigger a global sell-off in dollar holdings and boomerang the pain back to the United States. Now, we got to understand there's currently a global rush to dollars. I think we all know that by now. Countries big and small, they all need US dollars to import commodities and stuff. And they also need even more to settle their dollar-denominated debt. And if China does a coordinated selling of their dollars to buy up the yuan, this will start to push down the US dollar strength. The pendulum will swing back, and this will cause inflation to spike back up in the United States. Now, whether this will last or not will depend on if other countries decide to pile onto the action and start selling their US dollar reserves as well to rescue their own currencies. Because we need to realize that there's a breaking point coming. Something has to give sooner or later. Countries cannot keep printing more currencies to buy dollars, right? It will only feed into the dollar strength and devalue their currencies even more. It's a never-ending cycle that will lead to the US dollar being the only currency left in the world and everything else getting hyperinflated away, right? And according to the report, the scale of this dollar dump to prop up the yuan will be big. Their offshore branches, including those based in Hong Kong, New York, and London, were ordered to review offshore yuan holdings and check to see that dollar reserves are ready. So China is getting locked and loaded, and it's not just China doing it. Japan, a historic US ally, has sold over $20 billion to defend the yen. They have no choice. According to the finance ministry, this action drained away 15% of their dollar reserves for this intervention. But if we look at the yen versus the dollar exchange rate, we can see this historic intervention to prop up the yen has failed. They blew billions of dollars into the wind and nothing happened. Because we gotta understand what a currency intervention is. By selling their US dollars to the market, they're expanding the supply of dollars, right? Which should technically weaken it. But they forgot that the US, they are masters of money printing, and there's literally an ocean of dollars out there to dilute. And there are more people getting out of the yen into dollars today than what the Bank of Japan can buy. And that's why China's doing a coordinated dollar dump, right? They know they need to flood the system with more dollars to defend the yuan. So here's the big worry for China and for the United States as well. What if China's dollar dump fails? What if the state-owned banks just don't have enough dollars to make it happen? Now, China is facing a slowdown, guys. Their manufacturing activity has been cratering. We can see China's PMI index slipping below 50, which tells us that their manufacturing economy is contracting. And this is even with the weak yuan, which is supposed to help them sell more stuff to the world. And the reason is simple. We are slipping into a global recession. It should be very obvious right now. We have China's biggest customer, the United States, already in a technical recession. Winter is coming for Europe, and the UK is now in an economic crisis. No one has money left to buy anything. And this is why you are seeing China in a mad scramble to defend its currency because they are still importing stuff from overseas, right? Yuan is still being sold off for dollars to buy commodities and other inputs. But the Chinese people, they still use the yuan to buy goods and services locally. And if the central bank doesn't get a grip on it, inflation is gonna soar, especially once the lockdowns in China are over. It's not as bad as the US for now, inflation in China, but that could change very fast. And we can see China had over $3.2 trillion worth of forex reserves from the start of 2022, and the majority are in dollars, but they are already drawing it down to defend the yuan. But it might not be enough. Recent reports also show that Chinese banks have stockpiled over $1 trillion in forex. But is that really enough as well? And this is why there's a chance this is going to spill over into the US debt market. China is going to liquidate their dollar holdings, which means US treasuries, to raise cash to defend the yuan if it's not enough. The US might get hit with a bond crisis. And here's the deal, if this currency meltdown continues, both China and Japan will have to sell their treasuries. And those two countries hold the most US debt in the whole world. Now Japan has 1.2 trillion worth and China has just slightly under a trillion of US bonds. Now that is a lot of treasuries, but let's put this into perspective. We can see how significant China and Japan's holdings are in the entire US debt pie. They own 30% of all foreign holdings and over 7% of America's total debt. And this means if they were to let go of their US treasuries, yields are going to head up, guys. They are going to force down the value of bonds in the United States. Then mutual funds and investors are going to see this and they're also going to head for the exits. We are talking about yields spiking out of control and this will affect everything. Mortgage rates are going to soar. Zombie companies will crash because the cost of borrowing has gone up. The stock market could have another nasty meltdown if this happens. Remember the disaster we saw of the pension funds in the UK when their bond yields started to spike? Now all those hidden leverage and derivative instruments started to crash the market and fund managers, they were getting margin calls. And it got so bad that the Bank of England, they had to step in and launch QE Infinity. They had no choice but to flood the system with even more cash to rescue their bond market. And this is a black swan risk that could happen in the US as well, because we don't know what is hidden under the table. We don't know how much crazy leverage is being tacked onto the bond market. I don't know, guys. And this is the big problem with the strong dollar. It can't go up forever. Sooner or later, countries will need to save their own currencies. And if China, Japan, or other countries are pushed to the limit, if they need to sell off their bonds, and if it gets bad enough, we could see a meltdown in the bond market, a collapse in the stock market, and a crash in US real estate as well. China's going to help power hike rates for the US, but it will be in an uncontrollable way and might break something in the economy. It could actually force the Federal Reserve to pivot and defend the bond market by printing money all over again. And we are all back to square one of this disaster show. Now that's probably the worst case scenario. Sure, there might be a chance that China's dollar dump will work and they won't need to sell off their treasuries, but we have to understand that they want to exit their treasuries anyway, right? They have an incentive to sell even if there's nothing wrong with the Chinese yuan. They have seen what has happened to Russia's dollar assets and they're just one sanction away from seeing their dollars also get frozen. And the US discussing sanctions on China isn't helping the situation either. Now, this sell-off of dollars and bonds could trigger a global wake-up call to de-dollarization, and whether this is intentional or just a byproduct of selling treasuries, we don't know for sure. But countries are starting to wake up to this currency crisis, and they're going to start to weigh the consequences of holding too many dollars, right? We'll likely see more countries getting together on the table and saying, hey, let's trade in our own local currencies. Let's give this a try. Stop using the dollar and see if we can work something out. And I believe we're going to move into a new era, a new world of bilateral trade. And yes, the US dollar system is very convenient. I don't deny it. One currency to control them all. but it's now causing a currency crisis because the Federal Reserve is essentially hiking rates for the world and causing a dollar squeeze. And I think a common question is, won't this dollar dump hurt China as well? And this is where we need to tie into the current events we are seeing because everything is interconnected, right? China has signed a deal to buy Russian gas using rubles and the Chinese yuan. This is showing us that China is trying to diversify away from dollar denominated commodities, and this is key. They are slowly preparing to shift away from the dollar in case something happens. Maybe they have to dump a lot of their dollar holdings to defend the yuan. Maybe their dollars get sanctioned away, but they are not just de-dollarizing away from dollar assets. They are also diversifying where they get their commodities. And the world has to pay attention, including the United States as well. I believe we are moving into a period where countries have to begin to defend their currencies from the stronger dollar. Some will start to tighten and raise their interest rates, but I'm sure a lot more will start to consider dumping their dollars to save their local currency. And it's not really about trying to dethrone the dollar as the reserve currency. At this point, countries are just trying to survive this currency crisis, right? Because if they don't, then local inflation will soar and a lot of people back home will get poorer. And if they decide to dump dollars and move on to sell off their treasuries as well, then things could get very nasty back home in the United States. There will be a flood of dollars coming back, and this could jack up inflation, and rising yields will mean a deeper recession and even more demand destruction. And if China goes all the way and other countries hop onto the dollar dump bandwagon, we could see asset prices continue to crater as bond yields spike. So let me know what you think. How serious is this dollar dump? Will China be forced to sell off their treasuries as well? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these inflationary times.